Good evening people, good evening. Hope you had enough break so that we can proceed with our classes. Yes, shall we start? Nice afternoon nap you had, power nap, to become much more lazy, right? Give me a second. Okay, so we can start, right? We can start. We saw two illustration of this particular chapter where we are discussing about the preparation of financial statements. In preparation of financial statement, we started with preparation of financial statement of the non-corporate entity, right? Non-corporate entity, in that we have solved one sum relating to the trading account, the other sum relating to the P&L account. Now we are going to start solving illustration number 3. Okay. Yes. So illustration number 3. X, Y and Z are three partners sharing profit and losses equally. So what is the profit sharing ratio of X, Y and Z? The profit sharing ratio is 1:1:1. Okay. Their capital as on 1st of April 2021 were X rupees 80,000, Y rupees 60,000, Z rupees 50,000. So X 80, Y 60, Z 50. This is what, sir? This is their capital. Okay. They mutually agreed on the following points as per the partnership deed. Be very careful, as per the partnership deed. So where there is no partnership deed, profit and losses should be shared equally. No interest on capital is allowed. No interest on drawings is allowed. Partners loan will fetch 6% interest per annum, right? No salary is allowed to the partners. And when the partnership deed is available, according to the partnership deed, whatever the terms is there in partnership deed, same can be followed, provided that as per the Partnership Act 1932. Of course, I will explain that once we come to the Partnership Act, and you already learnt it in your foundation and class 12. So as per the Partnership Act 1932, no salary is allowed when there is a loss in the organization. No interest on capital is allowed when there is a loss in the organization. Okay. So these two are what? These two are nothing but a charge against profit and not a. These two are the charge against profit and not the. Sorry, these two are the appropriation of profit, not the charge against profit. Which means only profit is available, then only you should give this. If the profit is not available, you can't give all these things, right? So these are appropriation of profit, not charge against profit. Okay. As per the agreement, that is partnership deed, interest on capital to be allowed at 5% per annum. So interest on capital, it's 5% per annum. X to be received a salary of rupees 500 per month, which means for a year it is rupees 6,000. Okay. Y to be received a commission of at 4% on a net profit after charging such commission. Net profit after charging such commission. Okay. It's the net profit after charging such commission, which means you have to solve it in an equation. I will explain. After charging all other items, 10% of the net profit is to be transferred to general reserve. After charging all the things, we have to transfer 10% of the profit to general reserve, it seems. Okay. Profit from profit and loss account amounted to rupees 66,720. So for profit and loss is how much? Net profit 66,720. Prepare a P&L appropriation account for the year ended 31st March 2022. They are asking you to prepare a P&L account for the year ended 31st March 2022. Okay. Okay, sir. Fine. So just go through the question, we will solve. Just go through the question. We'll start solving, just go through the question. What do you mean by reserves? Reserves are a part of profit. Reserves are part of profit. So definition itself says it's a part of profit, which means only if profit is available, then only reserve is kept. If no profit, no reserve. No profit, no reserve. Okay. So we can say that reserve is nothing but a appropriation of profit, not a charge against profit. So general reserve also comes where? General reserve also comes in a profit and loss appropriation account and not a profit and loss account. In profit and loss account, all the charge against profit will be there, no? All those expenses will be recorded, which are not a charge against profit, but which are the appropriation of profit. They will be recorded in the profit and loss appropriation account. Okay. So we'll solve this. I didn't share the notes, no? I don't know how the sharing of notes to the people who are hearing the recorded session will take place. That I will talk to this institute people. I mean your coaching classes people, not CMA Institute people. I don't have so much power to talk to CMA Institute people. Okay. They're asking us to prepare a profit and loss appropriation account. Listen carefully. Interest on capital, that is also appropriation, because no profit will be allowed. Sorry, no interest on capital will be allowed if there is a insufficient profit, or if there is no profit, which means it is appropriation of profit. Next one, salary. Again, no salary is allowed if there is a loss in the organization. Only if there is enough profit, then only salary is allowed. Commission. Again, commission to partners. No remuneration to partners, either in terms of salary or in commission, is allowed if there is no profit. General reserve. General reserve itself says, definition itself says it's a part of profit, which means again that is also your appropriation of profit. So whatever they have given is appropriation of profit. They are telling profit and loss account, that is net profit, that is after charging all the expenses which are to be charged against the profit. After all those things, we are having a net profit of 66,720. They are asking us to prepare a profit and loss appropriation account. So we'll prepare a profit and loss appropriation account now. Give me a second. profit and loss appropriation account, debit, credit, particulars, So we'll start. Net profit, there it will be having a debit balance, so we have to bring a profit and loss this side, credit balance, right? So how much it is, sir? 66,720. So by profit and loss account, which is net profit, 66,720. 66,720. Later, what they are telling? They are telling interest on capital is to be allowed. So, what will be the who are the receiver of that? Partners will be the receiver of that, no? So, to partners capital account, okay, this is going to be added to the partners capital account. In brackets I will write interest on capital. Who are the three partners? Three partners are X, Y and Z, right? X, Y and Z, and their capital is 80, 60 and 50. X, Y, Z. 80,000, 60,000, 50,000. Interest rate is 5% per annum, no? Interest rate is 5% per annum. So into 5%, listen, anywhere, it might be while solving the sum or it might be in the examination all. First you have to read whole question. Later again go through the question and analyze how to solve, how to do this, how to do this, how to do this. Don't analyze and come in from the beginning. Okay. First you have to go through the question so that you will read the question twice. How many times you read the question, so much clarification you are going to get. In the question itself, answer will be there. So please practice art of reading the question. Yeah, till so far I haven't given you time to read the question, but here onwards I am giving. The reason is, till so far it was very basics which you have already learnt in your class 12 and foundation. So I was giving you a less time, because even I don't wanted to drag the much of hours. But now onwards, of course, as these are the important points, we are taking enough time to read the question. Okay. So, sir, we can pause and read the question. No, I know how much you will read by pausing. I will be shouting somewhere, you will be looking at somewhere only. And sometimes you will look, okay, what this guy is talking, still talking, how many hours more is there, right? So 80,000 into 5% will come to 4,000, 60,000 into 5% will comes to 3,000, 50,000 into 5% will come to 2,500. Total partners capital account, how much should be transferred, sir? 4,000, 3,000, 2,500, which is 7,000, 9,500. 9,500. 9,500 is a interest. 9,500 is a interest. Okay, one thing is done. Next, what is there, sir? X to be received a salary of 500 per month. So 2x capital account. 2x capital account. What is it? Salary. How much, sir? 500 per month. So 500 into 12. Rupees 500 into 12, which will come to 6,000. Okay, done. Next is what, sir? Y to be received a commission at 4% on net profit after charging such commission. They are telling net profit after charging such commission. I will explain how. Listen carefully. Who is entitled? Y is entitled, no? So to Y's capital account. to Y's capital account, which is commission. Let's write it as working note number 1. Let's write it as working note number 1. They are telling net profit before charging, after charging such commission. 4% of net profit after charging such commission. So we have to find out how much is a net profit available. How much is a net profit available for him? Listen very carefully. Working note number 1. Calculation of commission of Y. Calculation of commission of Y. Okay. Net profit before charging commission. Net profit before charging commission. Net profit before charging commission. How much is a net profit before charging commission, sir? Net profit before charging commission is 66,720 minus 9,500, which is interest on capital, minus 12,000, which is salary of X, right? 66,720 minus 9,500 minus 6,000. Sorry, 6,000, not 12,000. 500 per month, no? So it is 15,500. 15,500 to 51,000. 51,220. 51,220, right? 51,220. This is net profit before charging commission. Net profit before charging commission. Let net profit after charging commission be X. Oh, X, Y, Z are partners. Let's take it as A. After charging commission be A, because they are telling commission to be given after charging commission. Commission to be given on a net profit after charging commission. So let the net profit after charging commission be A. So after charging commission, how much will be? Simple. Net profit after charging commission is equal to net profit before charging commission. Net profit before charging commission minus commission, right? Minus commission. So net profit after charging commission is how much? A. We have already written it as A. Net profit before charging commission is how much? We computed it, right? We computed it. How much it is, sir? 51,220 rupees. 51,220 minus, how much is a commission, sir? Commission is 4% on the net profit after charging commission. 4% of the net profit after charging commission. So can I say it as 0.04A? Because net profit after charging commission is A. So upon that 4% is 0.04A. 0.04A. So when 0.04A comes this side, it will become plus, no? So A plus 0.04A, it is 1.04A is equal to rupees 51,220. Is equal to rupees 51,220. So A is equal to how much? A is equal to 51,220 divided by 1.04. A is equal to 51,220 divided by 1.04. 49,220. 250, sorry. 49,250. Therefore net profit after charging commission is rupees 49,250. Therefore commission to y is equal to 0.04 of rupees 49,250. So 49,250 into 0.04, rupees 1,970. So basically 1,970 is the commission. What they are telling later? After charging all other item, 10% of the net profit to be transferred after charging everything, which means basically we computed after charging everything, after charging including commission is how much? 49,250. Upon that 10% should be transferred to general reserve, it seems. So to general reserve, how much it is? 49,250, no? 49,250. This is after charging interest, after charging salary, after charging commission. 49,250 into 10%, which will come to 4,925. General reserve. Done. That's it, right? Nothing else. So credit side so much is there, debit side only so much is there, which means of course it's a net profit. So two partners capital account, because they are entitled for a salary, capital profit, two partners capital account. How much it is? In the credit side it is 66,720. In the debit side it is 9,500 plus 6,000, 15,500, 15,500 plus 1,970, 15,500 plus 1,970 plus 4,925. 22,395 is a total appropriation. If we reduce 66,720, we will get a profit available for a distribution to the partners, that is 44,325. 44,325. So partners sharing profit and losses equally, X, Y and Z. X how much, sir? 44,325 into 1 by 3. 44,325 into 1 by 3. 44,325 into 1 by 3. So how much it is? $44,325 divided by 3. 14,775 each. $14,775. 14,775. Done. Any doubt in this, guys? Any doubt in this? Hope you understood the computation of commission, computation of general reserve. Have you guys understood it? See, sir, they are telling commission to be paid after charging such commission. Commission is 4% after charging such commission, which is basically, if after charging such commission, what we did, we took it as A. Okay. So before charging such commission, how much was the profit? It was 51,220. That is after deducting salary and salary and interest on capital. So after charging such commission means net profit after charging such commission is equal to net profit before charging such commission minus commission. So commission is how much? 4% of after charging commission. If after charging commission is A, then commission should be 0.04A, right? 0.04A. So A is equal to net profit before charging commission, which is 51,220 minus 0.04A. So this 0.04A, negative 0.04A went to the left hand side and it had become 1.04A because minus will become plus. So 1.04A is equal to 51,220. A is equal to 51,220 divided by 1.04. We will get 49,250. So what is A? A is net profit after charging such commission. So how much is the commission then? 4% of after charging such commission. Net profit after charging such commission, that is 4% of 49,250, which will come as rupees 1,970. 1,970. So general reserve is what? General reserve is after charging everything. That is of course 49,250. Of that 10%, which is basically 4,925. Hope it's clear. Is it clear? Got it? Okay. Fine. Illustration number 4. Illustration number 4. Let's go through illustration number 4. From the following trial balance of measure BJ and Sons, prepare the final accounts for the year ended on 31st March 2022 and also the balance sheet as on that date. Stock they have given, opening stock, debit 2 lakh rupees. Okay. Purchases and sale they have given, purchase is an expense, so it will be having debit balance, so 22 lakh. Sales will be credit balance, which will be having 35 lakh. Bills receivable 50,000. Returns, debit means sales return, credit means purchase return, because purchase idu ulta is purchase return, sales ulta is sales return. So sales will be credit means sales return will be debit, purchase will be debit means purchase return will be credit. Carriage inward is 50,000, which is direct expense. Debtor and creditor 2 lakh, 4 lakh. Carriage outward is 40,000 rupees, which is not a direct expense, which is relating to selling expense. It is just to attract the customers. Discount they have given, debit 5,000, credit 5,000. One is received, one is paid. Salaries and wages. Sir, which discount, sir? Trade discount or cash discount they didn't give. Trade discount we will never book it. Trade discount, we will never book trade discount. Trade discount is there means what we will do, we will reduce it from purchase or a sales, and later we will write how much is purchase and how much is sales. So we are never going to show the trade discount in our books. It will be adjusted in purchases and sales in the beginning itself. So of course if it's discount means it should be a cash discount. Cash discount is not directly relating to trading activity, so it will come in the P&L. Salaries and wages are there. If it's a wages and salary, then you should consider it as wages. If it is a salary and wages, then you should consider it as a salary. Sir, how it makes difference? Wages is relating to trading activity, whereas salary is relating to running activity, running the business, administration activity. So if it's a salary, it will come in P&L. If it's a wages, it will come in the trading account. So here in the given question, it is salary and wages. That's why as the salary is a prominent one, so it will be taken into the P&L account. Insurance is there 60,000 rupees. They didn't give insurance of a factory or a administration, so we will consider it as general insurance. Rent is there 60,000. Rent is 60,000. Fine. Wages and salary is there 80,000. Here see wages and salary. This will be considered as wages. Okay. Bad debt is there 10,000 rupees. Okay. Furniture is there 4 lakh rupees. BJ's capital is there 5 lakh rupees. BJ's drawings is there 70,000 rupees, which means drawing should be reduced from the capital in the balance sheet. Printing and stationery, loose tools is there, loose tools 1 lakh rupees. Printing and stationery is there 30,000 rupees. Advertising is there 50,000 rupees. Cash in hand is there 45,000 rupees. Cash at bank is there 2 lakh rupees. Petty cash is there 5,000 rupees. Machinery is there 3 lakh rupees. Commission is there 10,000 debit, 30,000 credit, which means commission received is 30,000, commission paid is 10,000. Adjustment they are telling, finished goods stock, closing stock they are telling, cost price is 4,20,000, market price is 4 lakh rupees, stock should be valued at cost or NRV, whichever is lower. In this case, NRV itself is lower, which is 40,000. Depreciate furniture at 10% per annum and machinery at 20% per annum on a reducing balance method, which means on a balance. Rent of 5,000 was paid in advance, it seems. So rent which we paid, which they have given rent in the trial balance, it is not only relating to the current year, but also 5,000 of the next year is also included here. So we should eliminate it from our P&L, because that is not a expense for the period. In the P&L, we are going to take only income for the period and expense for the period as per the accrual concept. Salaries and wages due but not paid is 30,000 rupees. Make a provision for doubtful debt at 5% on a debtor. Commission receivable is 5%. Commission receivable is 5%. Just go through the question, guys. Just go through the question. Our Indian women's team is out of World Cup, but well played. Okay, now starting from one by one. As it is a big sum, I don't think it's feasible to solve, or shall I solve one? Okay, let me ask these people who are attending a live session. Guys, do you want me to go through it or do you want me to solve it? Hello? Hello? Guys, are you there? Go through it. Okay, deal. Fine. So they are asking us to prepare the financial statements, which is basically inclusion of trading account, P&L account and the balance sheet. So in the trading account, we will start with what, sir? We will start with the opening stock. They only give an opening stock. So in the trading account, debit side, to opening stock account 2 lakh rupees. All the trial balance items only once. All the adjustment twice. Trial balance item once, adjustment twice. So 2 opening stock 2 lakh rupees. Okay. Later there is a purchase. Later there is a purchase of 22 lakh rupees. Later there is a purchase of 22 lakh rupees. At the same time there is a return of 50,000 rupees. Purchase of 22, return of 50,000. So two purchases 22 lakh minus returns 50,000, which will be 21 lakh 50,000 rupees. Two opening stock 2 lakh rupees, two purchases 21 lakh 50,000 rupees. Okay sir, fine. Next what sir? Next what? Next there is a sale of 35 lakh rupees, at the same time returns of 1 lakh rupees. So buy sales 35 lakh rupees less returns 1 lakh rupees, which will come to 34 lakh rupees. Buy sales 34 lakh rupees. Okay. Next there is a carriage inward. It seems. So carriage inward is a expense, right? Carriage inward is a expense. Which expense, sir? Direct expense. Direct expense means what, sir? Which is relating to the purchases. When it's relating to the purchases, it should be relating to the trading activity. When it's trading activity, you should write it in the trading account. So trading account to carriage inward 50,000 rupees. Hope there is no adjustments relating to this. As there is no adjustments relating to this, to carriage inward 50,000 rupees. To carriage inward 50,000 rupees. Done. Let me not do this jatra and all. Let me just tick whichever is done. 2 lakh is done, purchases is done, sales is done, returns is done, carriage inward is done. Debtor and creditor, again it will go to the balance sheet, let it be. Carriage outward, it will go to the P&L, let it be. Discount is there, again it will go to the P&L. Salaries and wages P&L, insurance P&L, rent P&L, wages and salary. Wages and salary, as it is a wages is a prominent one. Wages is relating to, of course it is relating to production or basically trading activities. So two wages and salary in the trading account 80,000 rupees. As there is no adjustment, sir, there is adjustment, no adjustment number 4. Adjustment number is 4 is relating to salaries and wages and not wages and salaries. So two wages and salaries 80,000 rupees. So two wages and salaries 80,000 rupees. Done. Next what we have, sir? Next there is a bad debt. Bad debt is a P&L item. Because P&L item, because there is no provision is kept. There is no provision is maintained. Okay. Next year, of course, it will be not be the P&L item, because this time they are asking us to keep the provision for doubtful debt. So this time's provision is next time's expense. We can adjust next time's expense. Furniture is there, furniture is the balance sheet item. Capital is there, capital is a balance sheet item. Drawings is there, drawings is a balance sheet item. Sir, loose tools is your spawners, those things. Basically your fixed asset only. It is also your fixed asset only. So that is also balance sheet item. Because spawner and all you will not throw, no. If you open the 10 years old car, the jack and all which is there, which is given at the time of purchasing, that is still there in the car. So which means those things you will not throw. Printing and stationery. Printing and stationery is for the administration activity and not for the trading activity. So trading activity it won't come. Advertisement, again it is relating to the marketing. Marketing is not a trading activity, so it will not come. Cash in hand balance sheet item. Cash at bank balance sheet item. Petty cash, that is also cash balance only. It is also balance sheet item. Machinery balance sheet item. Commission, as commission is not relating to the trading directly, it is also coming in P&L account. Okay. They are telling finished stock is there. Cost price is 4,20,000, market price is 4 lakh. Cost price is 4,20,000, market price is 4 lakh. As per the AS2, your value of inventory should be, value of closing stock should be cost or NRV, whichever is lower. What is NRV, sir? Market price minus any expenses required to do that. Any expenses required to sell that. So basically, as there is no information relating to the expense required to sell the item, market price itself we are going to consider it as a NRV, and our closing stock will be lower of 4,20,000 or a 4 lakh, which is 4 lakh. So buy closing stock 4 lakh rupees. Buy closing stock 4 lakh rupees. So here we are done with the trading account. Here we are done with the trading account. Trading account credit is how much, sir? 38 lakh rupees. So debit is how much, sir? 2 lakh plus 2150, which will come to 2350, 2350, 24, 2480. So 2480 is a debit balance. 2480 is a debit balance, 38 is a credit balance, which means credit side is more. Credit side is more means net gross profit. So how much is the gross profit, sir? Not 14 lakh. 14 lakh minus 80,000 will come to 13 lakh 20,000. So 13 lakh 20,000 should be transferred to the P&L account as a gross profit. As a gross profit. Hope trading account is done. No doubts in it. Now the same gross profit has been taken to the P&L account. Gross profit brought down, or you can say it as trading account. You can say it as trading account. Okay. Now in the P&L account, let's come one by one now. Okay, sir, one by one. Bills receivable, of course, it's a balance sheet item. Returns is done. Debtors and creditors, balance sheet item. Carriage outward is there. So to carriage outward 40,000, but I think there should be some adjustments, right? No adjustments? What are you talking? Then where I saw there is some adjustments. Okay, rent, there is an adjustment. Okay, fine. So carriage outward, directly we will write it as to carriage outward. To carriage outward, this I am ticking in blue, P&L items. To carriage outward 40,000 rupees. So in the P&L, to carriage outward 40,000 rupees. To carriage outward 40,000 rupees. Okay, sir, done. Next, sir, next discount is there. Discount received is 5,000 rupees. Discount paid is 5,000 rupees. So by discount received 5,000, to discount allowed 5,000. By discount received 5,000, to discount allowed 5,000. See here. By discount received 5,000, to discount allowed 5,000. By discount received to 5,000, discount allowed 5,000. Debit means expense, credit means income. Okay, sir, that is also done. Later, sir. Salaries and wages is there 2,20,000. Salaries and wages is there 2,20,000. Along with that, there is an adjustment of 30,000, which means salary outstanding is there. There is a due, but it is not paid, it seems. Salary, there is a due, but it is not paid, it seems. So how much is the total salary for the period? Salaries and wages 2,20,000 plus add outstanding 30,000, which will come to 2,50,000. So two salaries and wages 2,20,000 plus 30, which will come to 250. 250. Okay, sir, done. Next is what, sir? Next is insurance. To insurance 60,000 direct. Is there any adjustment relating to the insurance? Usually there will be adjustment relating to the insurance as a prepaid, okay, but in this question there is no adjustment relating to that. Good. So to insurance directly I will write 60,000. To insurance I am writing 60,000. Done, sir. Next, rent is there. Rent is 60,000. Okay, but there is an adjustment of rent. Rent 5,000 was paid in advance, it seems, which means next year's rent. Next year's rent, right? So in the balance, in the P&L account, it is 60,000 minus 5,000. Rent 60,000 minus prepaid 5,000. 55,000 is a rent. So to rent 55,000. To rent 55,000. Done, sir. Next. Next, there is a bad debt of 10,000. So to bad debt 10,000. As it's an expense, only once it will come in P&L item. Sir, what about balance sheet? Don't you think it will get adjusted to the trade receivables? It has already adjusted to the trade receivable. That's why it is reflected in the TB. Otherwise, it would be there in the adjustments. Okay, sir. Furniture is there. Furniture is a balance sheet item. Capital drawings is balance sheet item. Loose tools. Printing and stationery 30,000 is there. Any adjustment relating to the printing and stationery? No adjustment relating to the printing and stationery. So to printing and stationery. To printing and stationery 30,000. To printing and stationery 30,000. Done. Next, advertising is there 50,000. Any adjustment relating to advertisement? No. So to advertisement 50,000. To advertisement 50,000. Done, sir. Done. Next, what is there, sir? Next, cash in hand is there, asset. Cash at bank is there, asset. Petty cash is there, asset. Machinery is there, asset. Commission is there. Commission paid is 10,000 rupees, received is 30,000 rupees. They are telling something. Commission receivable is 5,000, it seems. Which means we have already earned some commission, but out of the earned commission, only 30,000 we are receiving. But that is of the current year commission only, no? That is of the current year commission only. So, although it is not received, as it is receivable in the period, as it is receivable for the period, we are going to take it as a income for the period. So, in the P&L account, by commission 30,000 rupees, add outstanding or add earned but not received 5,000 will come to 35,000. So, by commission 35,000. By commission 35,000. Okay. Also 10,000 is a commission expense. So 2 commission 10,000. 2 commission paid 10,000. 2 commission paid 10,000. Done, sir. Okay. So trial balance is done. Depreciate furniture and machinery at 10% and 20%. So here depreciation is not there in the balance sheet. If it was there in the balance sheet, the assumption is it has already been adjusted to the plant and machinery. As here it is depreciation is there in the adjustment, nowhere it is adjusted. So we have to adjust it twice, one in the balance sheet, one in the P&L account. So for the P&L account, how much it is? Furniture 10%, machinery 20%. So furniture 10% means how much, sir? 4 lakh into 10% will come to 40,000 rupees. Okay, depreciation of furniture is 40,000 rupees. Machinery 20%, it seems machinery is 3 lakh rupees. So upon that 20%, which will come to 60,000, So two depreciation, furniture 40,000, machinery 60,000, which will come to 1 lakh rupees. 2 depreciation, furniture 40, machinery 60. Okay, done, sir. Next depreciation is done, rent adjustment is done, salaries adjustment is done. They are telling make a provision for a doubtful debt at 5% of debtors. Make a provision for a doubtful debt at 5% of debtors. Debtors has already been adjusted to the bad debt. So there is no need to compute 5% after deducting a bad debt, because bad debt is there in the trial balance, which means it is already adjusted to the debtors. So debtors is after adjustment of a bad debt, which means 2 lakh into 5%, which will come to 10,000. So to provision on doubtful debt 10,000. To provision on doubtful debt is 10,000. Okay, sir, done. Any other things? Commission receivable, it is also adjusted. So in the P&L account, credit side so much is there, debit side so much is there. Any item we left? Nothing. So finally net profit is there. How much is the net profit? 7,40,000 rupees. Net profit is 7,40,000 rupees. Better we'll check it once. 1320 plus 5,000, 1325, 1325, 1330, 1360. So total is 1360, correct. Here this side 250 plus 40, 290, 290 plus 60 will come to 350, 350, 410, 410, 465, 495, 495, 545, 585, 590, 600, 610, 620, 620 lakhs. So expense is 620 lakhs and income is 1360, means here it is around 380, here it is around 360. So total comes to 600, 740, correct. Net profit is 740. Done, sir. Now we have to prepare a balance sheet. So only blanks will see. Bills receivable. Bills receivable is a asset, right? Bills receivable is a asset. So it will be shown in the asset side of the balance sheet as 50,000 rupees. Bills receivable 50,000 rupees asset side. Yes, bills receivable 50,000 rupees asset side. Current asset it is, because it is going to be matured within 1 year. Whatever going to be matured within 1 year from the date of reporting will be current asset. If it's more than that, if it's a fixed asset. Done. Next, debtors and creditor is there. Debtor 2 lakh is there, creditor 4 lakh is there. Creditor no adjustment is there. Directly I will write liability side 4 lakh as a creditor. But debtor, listen, in the adjustment there is a provision. In the adjustment there is a provision, which means two times it should get adjusted. Once provision will get adjusted in the P&L, the other ones it's in the balance sheet. Either provision you can take it in the liability side, or you can reduce the debtor balance in the debit side. So in the balance sheet, debtors 2 lakh minus 10,000 comes to 1,90,000 rupees. Debtors 2 lakh minus 10,000 comes to 1,90,000 rupees. Here sundry creditors of 4 lakh rupees. Done. Next, what is there? Furniture of 4 lakh rupees is there. Listen, adjustment, depreciation has been given in the adjustment, which means twice, once in P&L, once in balance sheet. How in balance sheet? Furniture balance should be reduced. So in the balance sheet, furniture 4 lakh minus 40,000 depreciation, which will come to 3,60,000. So in the balance sheet, furniture 3,60,000. 4 lakh minus 40,000 comes to 3,60,000. Done. Next is what, sir? Next is BJ's capital. BJ's capital, in the capital side 5 lakh rupees. Also drawings is there. Less drawings of 70,000 rupees. It will come to 4,30,000 rupees. Add net profit. Add net profit. So how much it is? 4,30,000 rupees. 4,30,000 plus net profit of 740. 770, 1170. So capital it is 1170. Capital it is 1170. Okay. Capital 1170. Done, sir. What else, sir? What else? So loose tools is there. Loose tools is a fixed asset, 1 lakh rupees. No adjustment relating to that. In the fixed asset, we can see there loose tools of 1 lakh rupees. Loose tools of 1 lakh rupees. Done, sir. Done, done, done. Next, there is a cash in hand. There is a cash in hand 45,000 rupees and a petty cash of 5,000 rupees. Both are cash only. So cash 50,000 rupees. Cash 50,000 rupees. It is in the current asset. Cash 45,000 rupees. Petty cash 5,000 rupees. You can merge and write it as 50,000 rupees, as both are cash only. Not one is crypto, one is cash. Both are cash only. 50,000 rupees. Cash at bank is there 2 lakh rupees. So 2 lakh rupees directly we can write cash at bank 2 lakh rupees. Cash at bank 2 lakh rupees. Where it is? Here it is. Cash at bank 2 lakh rupees. Done. Next, there is a machinery. Machinery 3 lakh was there. Out of that 60,000 is a depreciation. Depreciation has been given in the adjustment. If it's there in the adjustment, it means that it has not been adjusted to the fixed asset. We have to adjust it to the fixed asset, as adjustment entry should get affected twice. Once it is already got affected in the P&L, now it should get affected in the balance sheet. How, sir? Machinery 6 lakh rupees minus depreciation, sorry, machinery 3 lakh rupees minus depreciation 60,000 rupees. So machinery 2,40,000 rupees should be there in the asset side. Machinery 2,40,000 rupees. Machinery 2,40,000 rupees. Done, sir. Next. Commission is there. Commission is done. Now going to the adjustments. Finished goods as the stock, closing stock. Once we have given adjustment in the trading account, once more we have to give, as the adjustment is twice, two side effects. So in the balance sheet, it is a current asset finished goods of 4 lakh rupees. Current asset stock 4 lakh rupees. Done, sir. We'll go to next adjustment. Okay. Depreciation of the furniture and the depreciation of machinery, already adjustment has been made. Rent of 5,000 was paid in advance, which means we have already paid in advance. The benefit is yet to be received. When the benefit is yet to be received, what it is? It is nothing but an asset. When the future economic benefit is there, it is nothing but an asset. So in the asset side, we will write current asset, rent prepaid, prepaid rent. So prepaid rent of 5,000 rupees. Once it has been adjusted in the P&L account by reducing from our expense, here we should add it to the asset. Two side effect, as it's in the adjustment. Salaries and wages are due but not paid is 30,000 rupees, which is a liability. Once it is already got adjusted in the P&L, now once more it should get adjusted in the balance sheet. As it's a liability, we should show it in the current liability of 30,000 rupees. Outstanding salary and wages of 30,000 rupees. Okay, sir, done. Next, make a provision of doubtful debt. Once it has been adjusted to the P&L account, once more it has been adjusted to the debtors account. Right, so it has already been adjusted. Commission receivable is 5,000 rupees, which means commission earned but not received is 5,000 rupees, which is our asset. Future economic benefit is there. So once it is adjusted to the P&L, now it should be adjusted to the balance sheet asset side. So commission is 5,000 rupees. I think everything is done. Yes, everything is done. This side also everything is done. That's it. Total once we will check. 360 plus 240 will come to 6 lakh rupees, 6 lakh rupees, 7 lakh rupees, 7, 11, 1290, 1290, 1340, 1340, 1385, 1585, 1590, 1595, 16 lakh. Okay. This side 1170, 1570, 16 lakh. That's it. Hope illustration 4 is clear. Very simple sum and illustration 4 is clear. Is it clear, guys? Is it clear? Yes. Okay, fine. Listen, some of you have the hobby of watching the videos in 1.5x, 2x, 1.25x, 1.75x because you want to complete it early, right? 2 hours video you want to complete it in 1 hour. Listen very carefully. You are just increasing the speed of your video. If you increase the speed of your video, that doesn't mean that your brain also will increase its speed of processing. When you increase the speed of video, there is a least chance of you retaining it. Yes, while looking at it, we will understand everything. We will understand, okay, this I know, this I know, this I know, this I know. We'll go on understanding, but we least retain it. We do not retain it. So, do not watch the video at more than 1.25x, okay? Do not watch it at more than 1.25x, any video relating to studies, of course. Movies and all, if you want to watch it in 8x, I don't care. That and all you don't increase, right? Because you want to enjoy, sir. But classes, we have to complete it as soon as possible, sir. So, please do not watch it in 2x or 1.5x or 1.75x. If that's the case, no? If that's the case, we faculties only will complete it soon, no? If we will be knowing, right, how much is the speed of the brain process. If we think that we are going slow, we will only increase our speed, no? Why we want you people to increase the speed? So, brain will not process due to the reason that you increase the speed. Brain process will be same only. Speed of brain process will be same only. So, please do not watch it in 2x or 1.5x or 1.75x. Better watch it in 1x only because there is a high possibility of retaining. Otherwise, you have to watch thrice 4 times to retain the same thing. Okay, sir, one more thing. Many of you have the hobby of looking at going the practical sums, not practicing it in home. Just going through the sum. When we go through the sum, no, we will feel like, okay, this I know, this I know, this I know, this I know. We go on keeping the speed. We will not practice. When we go and sit in the examination hall, we will start getting confused. I know that I have seen it in some question, but I don't know how I saw it because I just read and went. I didn't solve it and went. There is no practice. So there is a high possibility of we are getting confused and we are getting blank. To avoid that, at least solve once all the sums of the institute material. Okay, it's not something like only some you go on solving. Please read the study material 100%. Read the study material 100% and write at least 3 marks. Okay, mock writing is very important because whatever you want to do, all the experiment, no, do it and go outside the examination hall in the mock test. In examination hall, it is not the place to do the experiments. Okay, so all your experiments should take place outside in form of mock test and only perfection should go to your examination hall. Okay, okay, that is GAN of the day. Going to illustration number 8. Sorry, illustration number 5. Okay, sir, what are the illustration? What is illustration number 5? Mr. Arvind Kumar has a small business enterprise. He has given the trial balance as follows. Mr. Arvind Kumar capital 1 lakh rupees, machinery is there, depreciation of machinery is there. Depreciation of machinery is given in the trial balance, which means it has been already been adjusted to the machinery account. Machinery account. Sir, how do you know? It might have adjusted to the P&L only, no? No, you have to look at the nature of the item. Depreciation is expenditure, no? Depreciation is expenditure. Repairs to the machinery is there. Wages is there, salaries is there, income tax of Mr. Arvind Kumar is there. Income tax of Mr. Arvind Kumar is the personal expense, no? It is not an income tax of the firm. Individual, for a sole proprietorship, there is no income tax there is no income tax. But tax is levied on a person's profit. How much money will make on that the tax is levied. On business it is not levied if it's a sole proprietor, but if it's a partnership, yes, 30% of the profit should be paid as a tax. So the moral of the story is income tax of a proprietor is his drawings. Life insurance of a proprietor is his drawings, because business do not have any life to get it insured. Sir, then in business trial balance insurance and all will be there. That is general insurance, not a life insurance. That is general insurance, not a life insurance. Next there is a cash in hand, next there is a land and building, next there is a depreciation on building, which is given in the trial balance only once. It is already adjusted in the land and building. So now entry A was already passed, depreciation to land and building. Now we have to charge it to the P&L, finish. Purchases 250 is there, purchase return 3000 is there, sales of 498 is there. CC bank 7600, basically it is overdraft, credit balance. Bank balance is giving credit balance means overdraft, no. We have to pay to the bank, liability it is. Accrued income is there 3000 rupees. Accrued income means it is not yet received, but it is income for the period. Accrued income, okay, which is asset to us. In future it's receivable, no, it's asset. Income is our income. Accrued income means entry has already been passed. What entry, sir? Accrued income account debit to income account. Accrued income account debit to income account. Now income account is a P&L item, but accrued income is a asset whose money will be received in the next financial year. Done. Salaries outstanding is there. This is also given in the trial balance, means one entry has already been passed. What entry, sir? Salary account debit to salary outstanding is been passed. So now salary outstanding is a liability showing credit balance. We should take it to the balance sheet. Bills receivable is there, provision for doubtful debt is there. As provision for doubtful debt is giving a credit balance in the trial balance, it is also already adjusted against the P&L. What will be the entry? P&L account debit to provision for doubtful debt is there, no, it has already been adjusted. Bills payable is there 16,000, okay. Bad debt is there 2000 rupees. Bad debt is there, it seems 2000 rupees. As there is a provision, also a bad debt should be adjusted against a provision. One entry has already been passed relating to the bad debt, that is bad debt account debit to debtor is been passed. Now provision to bad debt is pending. Discount on purchases is there, okay, which is already adjusted once. Next, debtor is there, creditor is there, opening stock is there. They have given additional information. Closing stock they have given. They are also given write off further 6000 as a bad debt and maintain a provision of 5% on a doubtful debt. Goods costing rupees 10,000 were sent on approval basis to the customer for 12,000 rupees on 30th March 2020. This was recorded as a actual sales. This is sent on a approval basis, which means it is still yet to be realized. Sent on approval means customers have to approve whether they want it or not. You might have seen the mattress ad and all, where they will say 100 days free trial. So until 100 days they can't book it as a sales, as they don't know whether customer is going to send it back or what. Geo Fiber 1 month free trial. So 1 month they can't book a sales. If customer do not return it within a stipulated time of 1 month, then it can be treated as a sales. 2400 paid as a rent for a office was debited to the landlord's account and included in the debtors. Okay. General manager is to be given a commission of 10% of a net profit after charging his commission. Okay. After charging his commission, it seems fine. Work manager is to be given a commission of 12% of a net profit before charging general manager's commission and his own. So he should be given a commission before charging the general manager's commission. Okay. You are required to prepare a final accounts of Mr. Arvinda Kumar and also the balance sheet as on that date. Fine. Just go through the question. Just go through the question. Fine, we'll solve. I think it's better to solve. I know it's a simple one, but still there is adjustment relating to provision and there are certain adjustments relating the other adjustments. Will better let me solve quickly. Okay. Illustration number 5, we have to prepare a trading account, P&L account and a balance sheet. So let's prepare it. First we'll prepare a trading account, okay? Okay. Mr. Arvind Kumar, right? Mr. Arvind Kumar, what accounts are trading account? Trading account for the year ending 31st March, no? For the year ending 31st March 2022. Debit, credit. Particulars. Okay, fine. We'll go one by one. Mr. Arvind Kumar's capital, it is balance sheet item. Machinery, balance sheet item. Depreciation, P&L item. Repairs to machinery, P&L item. Wages, trading item. Salaries, P&L item. Income tax, it is drawings, again balance sheet item. Cash in hand, balance sheet item. Land and building, balance sheet item. Depreciation, P&L. purchases trading, purchase return trading, sales trading, overdraft balance sheet item, accrued income balance sheet item, salaries outstanding balance sheet item, only balance sheet item, not P&L item, because salary has been already adjusted to the salaries outstanding is already adjusted to the salary account. That's why it is showing a credit balance. What entry we pass, sir? Then salary account debit to salary outstanding account. We have already passed the salary account debit to salary outstanding. That's why it's showing a credit balance. Okay. Bills receivable balance sheet item. Provision for doubtful debt balance sheet item so far. Balance sheet item so far. Bills payable balance sheet item. Bad debt P&L item. Discount on purchases. Discount on purchases, don't think that it's a trading discount, it's a cash discount only. That is our creditor is giving us a discount. So it is a P&L item. Debtors balance sheet item. Creditors balance sheet item. Opening stock trading activity, trading account. Opening stock is trading account. Okay. Stock as on 31st March. Closing. Closing should be adjustment, one in a trading account, the other one in a balance sheet. One in the trading account, the other one in the balance sheet. Write off further 6,000 as a bad debt and maintain a provision of 5% on doubtful debt. So basically one in a P&L and one in a balance sheet. One in a P&L and one in a balance sheet. Okay. I think for you people both the colors are looking similar, no? Black and blue. Goods costing rupees 10,000 were sent on a approval basis from customer. So one should be adjusted to the trading account. The same should be adjusted to the balance sheet as a closing stock, because that is our closing stock. We should reduce it from the sales. At the same time we should add it to the closing stock. At the same time we should add it to the closing stock. 2,400 paid as a rent for an office building was debited to the landlord account, was included in the debtor, it seems. So instead of rent we have included it in the landlord. So P&L account it should get affected. At the same point of time balance sheet it should get affected. We should reduce it from the debtors. General manager is to be given a commission of 10% on net profit after charging his commission. It should be given, which means it is not yet paid, outstanding it will be. So one in P&L, one in balance sheet. Work managers, again one in balance sheet, one in P&L. You are required to prepare a final accounts. Fine. We'll go through first opening stock. How much is the opening stock, sir? Opening stock is 74,000. So in the trading account, two opening stock, how much it is? It is 74,000. Two opening stock, it is 74,000. Okay. Next is what, sir? Next, purchase is there, no? Purchase is there, 2,50,000. Purchase return is there. Before that will come like order wise only. Wages is there. Wages are there. Wages is 5,200. Two wages, 5,200. Also going further, there is a purchase returns. Two purchases, 2,50,000 minus purchase returns 3,000, which will come to 2,47,000. 2,47,000. Okay. Next there is a sales. So by sales 4,98,000. By sales 4,98,000. Okay, done. Next there is a opening stock of 74,000 that has been adjusted. Stock is there. Before that there is one more adjustment relating to the goods sent on approval. Goods sent on approval is included in the sales, it seems. Whether it's a realized, no, it's not yet realized. Then why we are violating a realization concept? Realization concept says what, boss, you have to take it as an income only if it's realized. So out of 4,98,000 sales, Out of 4,98,000 sales, some amount is sent on a sale or return basis and no confirmation is received from our customer. So it is not yet realized. So we will treat it as our goods only. So 12,000 is what sales value included. So minus goods sent on approval basis. Goods sent on approval basis. How much it is, sir? It is 12,000 rupees, because sales includes sales value and not the cost value. It includes sales value, not the cost value. So it will come to how much? 4,86,000. It will come to 4,86,000. Okay. At the same point of time, there is a closing stock. No, there is a closing stock, 60,000 rupees. By closing stock 60,000 rupees. This is excluding this goods which is there with our customer, because we consider it as a sales. So what we should do? We should add our goods sent on approval basis. Goods sent on approval basis. Listen carefully, guys. Listen carefully. Always you should value your cost at cost or sales price or NRV, whichever is lower. In the given case, cost is how much? 10,000 rupees. Sales is how much? 12,000 rupees. So your value of the inventory is only 10,000, not at 12,000. So add 10,000. So your closing stock is 70,000. Your closing stock is 70,000. I think so far it's done, no doubt. No doubt so far. Right? Any doubt? Any doubt? Any doubt? No doubt. Fine. So anything is pending? Nothing, no? So what we will do is, we will find out which side is more. Credit side is more, no? 4,86,000 plus 70,000, which will come to 5,56,000. 5,56,000. Okay. Here it is 2,47,000 plus 74,000 comes to 251, 321, 326, 200. 326, 200 means 2 lakh. 1,99,800, right? How much it is? Wait. Anything we left? Wages, it's 54,000, not 54,000 it is. Oh, wait. Wages, it's 54,000. Why I wrote so much? Even I don't know. Why I wrote 5,200? Instead of repairs and machinery, that amount I took it as a wages. No one told me. Smart people. Very smart people. Let him make the mistake. He will waste the time. So, how much it is? 74 plus 54 will come to 58, 58 plus 70, 128, 128, 135, 175, 375. 375 means 25 25, 61, 181. 181 is a profit, no? 181 is a profit. 2 gross profit. 2 gross profit balancing figure. This is what, sir? This is trading account. We are done with the trading account. Very simple. Alright, very simple. Done. Now we have to prepare a P&L account. Give me a second. P&L account. Profit and loss account for the period ending 31/3/2022. 31/3/2022. Particulars. Fine. We'll start now. Okay. Starting from the first one. Depreciation on machinery is there, 4,000 rupees, which is first we have to take the gross profit, no, by trading account, which is basically GP. How much is a GP? 181, right? 181,000. 181,000 is a GP. Okay, sir. 181,000 is a GP. Fine. Depreciation of machinery is there. So to depreciation of machinery 4,000. To depreciation of machinery, how much, sir? 4,000. Done. Next, what is there? Repairs to machinery is there. Two repairs. How much it is? It is 5,200, right? Why it is happening like this? Let me check. Why it's overlapping now? Give me a second. The earlier one got overlapped. There is a glitch in the application. Profit and loss account for the period ending 31/3/2022. Okay, let it be. So 2 machinery done, 2 repairs, right? Two repairs. How much is 2 repairs? 2 repairs, it is 5,200. 5,200 done. Next, wages is done. Salaries is there, 21,000. Is there any adjustment relating to the salaries? Adjustment relating to the salaries? No adjustment relating to the salaries. No adjustment relating to the salaries. Very rare it is. Will usually outstanding will be there. So salaries 21,000. Two salaries 21,000. Two salaries 21,000. Okay, fine. Next, sir. Purchases is done. Depreciation on building is there, no? Depreciation on building is there. Guys, what will be the entry for depreciation of land? What will be the entry for depreciation of land? Depreciation account debit to land account, right? Absolutely wrong, because land is not a depreciable asset. We will not depreciate land unless it's a mining. That is called as depletion, not a depreciation. So don't say depreciation to land generally, thinking somewhere. So on land depreciation will not be there. So to depreciation on building. So depreciation on building. How much is the depreciation on building, sir? Depreciation on building is 5,000 rupees. Okay. Bad debts are there, 2,000. Wait, we will adjust it for the provisions. Okay. Discount on purchases are there. So by discount received 7080, no? 7080. By discount received 7080. Fine. Bad debt is there. I will adjust that. Give me a second. Next, they are telling stock valued at so much. Write off further bad debt of 6,000 and maintain a provision of 5% on bad debt. So we will do a working note. We'll give a space for a balance sheet and we'll do the working note. Working note number 1. Provision for doubtful debt account. Provision for doubtful debt account. So quickly we'll do this. Debit, credit, particulars, okay, fine. In the given question there is a provision opening balance, no? Somewhere provision for doubtful debt, opening balance of 10,000 is there. So buy balance carried down, or sorry, buy balance brought down, 10,000 is there. Okay, 10,000 is there. Fine. Next is what, sir? Next there is a bad debt which we should write off. So to bad debt 2,000. To bad debt 2,000. We should write it off against this. And also they are telling write off further 6,000 bad debt. Write off further 6,000 bad debt. So to bad debt again. To bad debt 6,000. See, for the 6,000 again we should reduce it from the debtors because it is not there in the TB. If it's there in the TB, then it is adjusted to the debtors. If it is not there in the TB, it is not adjusted to the debtors. So 6,000 is there. Fine. They are asking us to maintain a provision of 5% on doubtful debt. They are asking us to maintain a provision of 5%. So to balance carried down. 2 balance carried down. How much it will be? Debtor is how much? Debtor is how much? Debtor is 70,000. No, debtor is 70,000. Debtor was 70,000. After that, there was an additional bad debt of 6,000 happened. So upon that, they are asking us to maintain 5%. No, so 64,000 into 5%, which will come to 6,400, 3,200 basically. So 3,200 is what they are asking us to maintain. 3,200 is what they are asking us to maintain. Okay, sir. Which side is more? Debit side is more. Alright. 8,000, 11,200. If there is no provision, then write off the bad debt directly. When the provision is there, always make sure you will make the provision for doubtful debt or a bad debt account as a working note. So don't follow the textbook in this thing. They complicated the things. 8,000, 3,200, 11,200. 11,200. So by P&L account, how much, sir? 1,200. This is what? Additional provision. How much? 1,200 is additional provision. So in the P&L account, I will write it as to provision on doubtful debt, working note 1 is how much? 1,200. How much was that? 1,200. 1,200. Okay, done. So bad debt thing is done. This is done. Stock is done. Further provision is done. Goods costing 10,000. It's done. 2,400 paid as a rent for a office was debited to the landlord, it seems. So actual entry should have been what? Actual entry should have been rent to bank. Okay, rent to bank should be the actual entry. But what wrong entry we are passing? What wrong entry we are passing is, we are passing landlord or a debtor. Okay, there is one more adjustment. So what we are passing is debtor account debit to bank we are passing. Debtor account debit to bank we are passing. Actually what we should do now, we should debit the rent account, we should credit the bank account. Simple. Sir, how to do that? Listen. What are the things we should do? How to rectify? Step 1. Pass reversal entry for wrong entry. Okay. Step 2. Pass correct entry. Step 3. Merge 1 and 2. We have to merge 1 and 2. First, what is the wrong entry? Wrong entry is debtor to bank, right? Wrong entry is debtor to bank. Now we have to reverse it. What will be the entry? Bank account debit to debtor account. Bank account debit to debtor account. Okay, sir, fine. Bank account debit to debtor account. Also reversal entry is done. What is the correct entry? Correct entry is rent account debit to bank account. Okay, now we have to merge this. While merging, we came to know that bank debit, bank credit goes cancelled. Final entry will be rent account debit to debtor account. Rent account debit to debtor account will be the final account. So debtor we have to reduce. Give me a second here. Now it will go wrong. Give me a second. This debtor balance is not 70,000 minus 6,000. Debtor balance is 70,000 was there. Out of this 6,000 is a bad debt, and also 2,400 is rent account, which we should credit it into 5%. So 70,000 minus 6,000 comes to 6,400. 6,400 minus 2,400 comes to 61,600. 61,600 into 10% will come to 6,120, which means 3,060 is balance. 3,060 is balance. 3,060 is balance. So here it is not 11,200, it is 11,060. Here also it's not 11,200, it's 11,060. Give me a second. And their balance is not 1,200, balance is 1,060. 1060. So here P&L it is not 1,200, it's 1,060. 1,060. At the same point of time, the adjustment should get recorded twice. No, one debtor it has been reduced. At the same point of time, one should come in balance P&L. No, that is rent, because that is our expense for the period. So rent will be debited. To rent 2,400. To rent 2,400. Fine. Fine, sir. Fine. General manager is to be given commission at 10% of a net profit after charging his commission. Okay. Work manager is to be given a commission of 12% at net profit before charging general manager's commission and his own. So work manager should be given a commission of 12%, it seems, before charging his own commission and general manager commission. So we have to find out the net profit before charging general manager commission and work manager commission. Okay. So how much will that be? Wait. One lakh 81,000 plus 7,080, which will come to 188,080, right? 188,080. So 188,080. This is what the balance is to net profit before commission, right? It is commission, no? Before commission to general manager and work manager, both. Before commission to general manager and work manager, how much it is? 4,000, 9,200, 9,200, 30,200, 35,200, 35,200, 37,600, 38,660, 38,660. Give me a second. 38,660 minus 188,080. 149,420. It is 149,420, right? Profit before charging any commission is 150. How come? Provision for a doubtful debt is 2480. Give me a second. Let's find out how provision for a doubtful debt is 2480. 70,000. Oof. Fine. Listen. What they have treated as the goods which is sent, no? the goods which is sent on return approval basis, that has sent on a credit basis, so of course what happens at that point of time, when it is sent on a credit basis, our debtor is also debited, no? So actually we should credit our debtors, for the same amount. So we had a balance of 70,000 debtors. Out of that 12,000 was towards a sale or return basis, but actually they are not our debtors. Okay, fine. Also 6,000 is a bad debt. 6,000 is a bad debt which is not yet adjusted. Okay. 2,400 is a landlord which is rent, actually the entry we passed, no, rent to debtor account, that one. Upon this we have to calculate a 5%. So how much it will be? Give me a second. 70,000 minus 12,000, which will be 58,000, minus 6,000, which will be 52,000, minus 2,400, which will be 49,600, into 5%, 2480. Sorry, the balance is 2480. I forgot that, because only once we have given a sales effect. No, only once we have given a sales effect. I forgot. 2480. So this side the balance is how much? 2,000 plus 6,000 plus 2480, 10,480. 10,480. Here it is 480 is the balance. 480 is the balance. I knew this is the one which is going to, be a bouncer. Still it became bouncer. I thought of 480. So now we will compute 4,000 plus 5,200 plus 21,000 plus 5,000 plus 480 plus 2,400 minus 188,080, which will come to 1,50,000. So the net profit is 1,50,000 before charging a work manager commission, as well as one more, general manager commission. Okay, so by net profit, how much it is? 1,50,000 before commission. Okay sir, done. So before commission is so much, no? Yes. Now commission is how much? They are telling work manager is to be given commission of 12% on net profit before charging general manager commission, which means directly 12% on this 1,50,000. Directly 12% on this 1,50,000. So to commission, who is that? Work manager, because he is not telling all those dramas after charging commission, before charging commission. This is before charging commission, direct. So if it was after charging commission, we should have done it in a equation method. So 1,50,000, upon this he is entitled to a commission of 12%. So 1,50,000 into 12% is how much? 15,000 is 10%, 2% on 1,50,000 is 3,000. So basically 18,000. To commission 18,000. Okay. Now what we will get? Now we will get net profit before charging commission of general manager. $1,50,000. So how much it is? To net profit. This is before general manager commission. before general manager commission. How much it is? 1,32,000. 1,32,000 by net profit, before GM commission, before general manager commission. How much it is? 1,38,000. From this, if we reduce the general manager commission to general manager commission, this is working note number 2. We will do a working note for this. Of course we have to do. So working note number 2. Computation of general manager commission. Okay sir, how to compute sir? What they are telling about a general manager commission? We have to look at what they are talking about a general manager commission. They are telling that general manager is to be given a commission of 10% of a net profit after charging his commission. So net profit after charging commission is equal to net profit before charging commission minus commission. Yes. Now let net profit after charging commission be A or X. Let net profit after charging commission be X. Okay, net profit after charging commission be X. So X is equal to net profit before charging commission is how much? 150 minus 18,000, 132,000 minus commission is how much? 10% of net profit after charging commission, which is 0.1x. 10% of x, 0.1x. So it will become 1.1x, 1,32,000. So x is equal to 132,000 divided by 1.1. X is equal to 132,000 divided by 1.1. 132,000 divided by 1.1, which will come to 1,20,000. X is equal to 1,20,000. So net profit after charging commission is 1,20,000. So general manager commission is equal to rupees 1,20,000 upon the 10%. Upon the 10%, which will come to rupees 12,000. Done. So here it is how much sir? Here it is 12,000. That is 12,000. So how much is the net profit after everything? Sorry, it is net profit is 138, 132, no? So to net profit. How much is the net profit sir? Net profit is 1,20,000, which should be transferred to the capital. After all the drama, we have to transfer 1,20,000 rupees to our capital. So 1,32,000. 1,32,000. So 1,20,000 is what we are going to transfer to our capital. Fine. So last one thing is pending. What is that sir? That is balance sheet. balance sheet as on 31/3/22. Listen, balance sheet as on, not balance sheet for the year and all. Balance sheet on that particular date we are going to give. So balance sheet as on it is. Okay. Okay, sir. Debit credit, no? Debit credit particulars. It is liabilities, not debit credit. Why, sir? Balance sheet is a statement. Liabilities, assets. Liabilities and assets. Okay, we'll go one by one. Arvind's capital is there, 1 lakh rupees. Arvind's capital opening 1 lakh is there. Yes, opening 1 lakh is there. From that minus drawings is there. So opening 1 lakh, drawings is how much? Drawings is not there. Drawings is there, 1000 rupees. Income tax. Drawings is 1000 rupees income tax. Add net profit. Net profit is there. Yes, how much is the net profit? 1,20,000 is the net profit. Anything else to be adjusted to the capital? Anything else to be adjusted to the capital? Nothing, no. So 1 lakh plus 1,20,000 comes to 2,20,000. 2,19,000 is a capital. 2,19,000 is what, sir? 2,19,000 is a capital. Done. Next, there is a machinery of 36,000. So machinery is there, no, sir? 36,000. We have to reduce the depreciation from that, no? Absolutely wrong. Why? Because depreciation on machinery is given in the trial balance. If it's given in the trial balance, what we should do, boss? If as it is given in the trial balance, we should we have already given it in the P&L only once. It is already been adjusted. That's why only depreciation is debit. We have already done depreciation account debit to machinery account. So machinery account is after adjustment of depreciation only. So it is 36,000. Machinery is 36,000. Okay, done. Machinery is 36,000. Depreciation is done. Wages is done. Salaries is done. Income tax is done. Cash in hand. Cash in hand is there. How much? 4,000. Cash in hand 4,000. Okay, cash in hand 4,000 is done. Land and building is there. How much? 1,49,000. But depreciation they are telling, no, depreciation again, that is in TB. So land and building, land and building, it is 1,49,000. Okay, sir, done. Next is what? Next overdraft is there. Bank overdraft 7,600. Liability. Bank OD 7,600. Okay, done. Next, what is there? Accrued income is there. Asset 3,000. Accrued income 3,000. Asset. Salaries outstanding is there. Liability 4,000. Salary outstanding, liability 4,000. Okay. Bills receivable is there. 30,000. Okay. Provision for doubtful debt is there. 10,000. That we have already adjusted. We will adjust that later. Bills payable is there. 16,000. Bills payable, how much, sir? How much is a bills payable? Bills payable is 16,000. Okay. Debtor is there 70,000. We have to adjust it. Listen carefully. Debtor 70,000 was there, minus bad debt 6,000 is a bad debt. Sir, what about the other 2,000? Other 2,000 has been already adjusted because that bad debt is given in the trial balance, which means already we have passed the entry bad debt to debtor. That's why it's there showing a debit balance. So debtor already adjusted for that. Only the 6,000 additional thing is there, no, that is not adjusted. So fine. Minus rent. Towards rent, out of the bad debt 2,400 we are taking out. No, landlord account gets credited, I mean debtor account gets credited and the rent account gets debited. So 2,400 is done. Sale or return approval basis, we have credited sale on approval, right? How much it is? 12,000. We have already debited him, but we should credit him now. We should credit him now. How much, sir? 12,000. Okay. Next, what will be the entry? What is the other things? I think no other things are there. How much it is? 70,000 minus 6,000, 64,000, 64,000, 52,000, 40,000, 49,600. 70,000 minus 6,000 minus 2,400 minus 12,000, 49,600. 49,600. Now provision, we have two options. One, show it in the credit side, I mean liability side, or show it as a deduction from the debtor. So minus provision. Minus provision. How much is the provision balance? How much is the provision balance? Provision balance is 2,480. 2,480 is a provision balance. So 2,480. So 49,600 minus 2,480 comes to 47,120, right? So the debtor is 47,120. Debtor is 47,120. Fine, sir. Then creditor is there 62,520, no adjustment only. Creditor 62,520, no adjustment. There is a closing stock of 60,000. Closing stock 60,000 was there. For that we added a goods on approval basis. Goods on approval. Twice it should get affected. No, once it got affected there, once it should get affected here. So how much was the 10,000? No, 10,000 was the cost of that. So the closing stock is 70,000. Okay, sir, done. Next, what, sir? General manager commissions. General manager's commissions, which is not yet paid, no, twice we should give. So commission payable. Commission payable. For that guy, how much it was? 18,000. And for this one, how much it was? 12,000. 150 minus, yeah, 12,000. So around 30,000 was a commission payable. 30,000 was a commission payable. That's it, I feel. Any other things we left? I don't think so. We'll see. If we have left anything, balance sheet won't match. If it's the error of compensation or principal error or complete omission, then balance sheet will match. So how much is the asset side, sir? 36,000 plus 4,000 plus 1,49,000 plus 3,000 plus 30,000 plus 47,120 plus 70,000. 339,120. 339,120. Okay. This side how much, sir? 219,000 plus 7,600 plus 4,000 plus 16,000 plus 62,520 plus 30,000. 339,120. It's matching. Done. It was a big question, a pretty big question. So we have done so much, and again I don't know what is happening with this. It's coming again and again. So this workings, I will just put it there. Give me a second. Fine. Hope it's done. Did you guys understand? Let's ask the people who are what IT she come in debit side. No sir, what is there sir? I didn't understand sir what you are asking. Can you please ask it again? Sorry, it was long back. Cleared? Okay, fine. Okay, it should come in debit. Okay, she has happened. Auto corrections. She and all. Okay, hope you people understood. Yes, fine. We'll take a break of 6 minutes, okay, and we'll start again. We'll take a break of 6 minutes and we'll start again. Fine. Fine. We'll start now. We'll continue. So illustration number 5 is done. Now moving further, they have given illustration number 6. Give me a second. Fine. Which we are doing now? Illustration number 6. Mr. Abhay runs a small shop and deals in various goods. Basically, it is a general stores now. He has not been able to tally his trial balance and has lost it by taking the difference to suspense account. So he closed it by taking it to suspense account, it seems. So he is not batching a trial balance, but he closed it by taking into suspense account. There is a capital, there is a drawings, there is a fixed asset, there is a opening stock, there is a purchase and purchase return, there is sales and sales return. And due from customer to creditor is nothing but debtor and creditor. Expenses they have given, cash they have given, bank deposit and interest earned is given. Suspense account 4,000, which is showing a credit balance. Suspense account is a credit balance now. Advertising is 2 lakh rupees. Okay. Mr. Abhay has requested you to help him in tallying his trial balance and also prepare his final accounts. On the investigation of his book, you get the following information. Closing stock is 45,000 at cost and could sell over this value. So cost is so much, selling price also so much, which means whichever is lower, this is only lower. Depreciation 13,500 needs to be provided for the year. Okay. A withdrawal slip indicate a cash withdrawal of rupees 15,000 which was charged as a drawings. However, it was noticed that 11,000 was used for the business purpose only and was entered as a expense in a cash book. So 15,000 charged into drawings it seems, but in the cash book we are charging it to the P&L expense only. Okay, one mistake. Goods worth rupees 19,000 were purchased on 24th May and sold on 20 for so much. Sales were recorded correctly, but purchase invoice was missed. So sales we recorded, but purchase we didn't record. We have to record it. Purchase return of 1,500 were routed through the sales return. Parties account was correctly posted. So purchase return of 1,500 is there. That is reflecting in the sales return it seems. Purchase return of 1,500 is reflected in the sales return it seems, but the party account is correctly getting posted. That's fine. So purchase return, sales return we have to rectify. Expenses included rupees 3,750 relating to the period after 31st March 2022. So expense, there is an advance expense of 3,750. Prepayment. Purchase book was overcast by rupees 1,000. Purchase book has been overcast. Posting to supplier account is correct. So purchase we have to reduce. Advertising will be useful for generating a revenue for 5 years. Okay. Advertising is useful for generating a revenue for 5 years. Just go through the question guys. Just go through the question. We will start. Just go through the question. Okay, okay, we'll start now. Listen, listen. Abhi's capital is fine. Drawings related, there is a adjustment. Drawings related, there is a adjustment. They are telling 75,000 is a drawings, no? They are telling 75,000 is a drawings. That's fine. But listen here carefully. A withdrawal slip indicated a cash withdrawal of 15,000 which was charged to the drawings. So cash withdrawal of 15,000 has been charged to the drawings, it seems. Okay, fine, no issue. However, it was noticed that 11,000 was used for the business purpose. 11,000 was used for what purpose, sir? 11,000 is used for the business purpose, which means we charged 15,000 to drawings, no? We charged 15,000 to drawings, no? Whole 15,000 is not drawings. Only out of this 4,000 is drawings, which means 11,000 we have to reduce from this. From this 11,000 to be reduced, which will give us the answer of 64,000. Which will give us the answer of 64,000. Okay, fine. And was entered as an expense in cash book, it seems. And it is also entered as an expense in cash book. So, two effect. Once it is entered as a drawings 15,000, which means 11,000 we eliminated. Also in cash book again once more it is entered as an expense, which means cash balance further reduced by 11,000. So what we should do? We should add back to the cash balance. Cash balance is showing 3,000 credit, 11,000 should be added back. So it will show now 8,000 debit balance. Cash will show 8,000 debit balance. Listen very carefully. What we are doing? First we are doing drawings to bank or bank to cash. Okay. We are doing first entry bank to cash. Sorry, cash to bank. We are withdrawing it now. Cash to bank we are doing. Later what we are doing? Later we are doing drawings to cash. Later we are doing drawings to cash. How much? 15,000. 15,000. Okay. Also one more entry is coming as expense to cash. Also one more entry is coming expense to cash. 11,000. 11,000. Now cash is how much? Cash is getting credited by 26,000. It only should have get credited by 15,000. How, sir? What should be the correct entry? Correct entry should be drawings account debit 4,000, expense account debit 11,000, to cash 15,000. To cash 15,000. But actually what is happening? Drawings account debit 15,000, expense account debit 11,000, cash account debit 26,000. So I have already told you people that when there is a rectification, step 1 is what? Reverse the wrong entry. Step 1 is reverse the wrong entry. Step 2, pass the correct entry. Step 3, merge step 1 and step 2. So how it will look? It looks like this. Listen. It will look like this, okay? How, sir? Like this. What is the wrong entry? We'll pass the wrong entry first. Wrong entry is drawings account debit 15,000, expense account debit 11,000, to cash 26,000. Okay. So reversal of this entry is what, sir? Reversal of this entry is cash account debit. First we have to reverse now. So reversal of this entry is cash account debit 26,000, to drawings 15,000, to expense 11,000. Cash account debit 26, to drawings 15, to expense 11. Okay, fine. Now this is reversal entry. What is the correct entry? correct entry should have been drawings account debit. This is step 1 This is step 1. Step 2 is what? Drawings account debit 4,000, expense account debit 11,000, to cash account 15,000. Now when we merge it, what happens? Drawings debit 4,000 will go out of this credit, 15,000, only 11,000 will be pending. So correct entry is step 3. Correct entry is what? Two drawings out of 15,000, debit of 4,000 will go and only 11,000 will be pending. Expense 11,000 debit, 11,000 credit. So this whole thing will go. Cash. Oh sorry, here it is. Same. Expense, this will go. Cash debit 26,000 is there, credit 15,000 is there. So basically debit balance of 11,000 will be pending. So cash account debit 11,000 to drawings account 11,000. So what happens here? Drawings account debit balance of 75,000 will become debit balance of 64,000. Cash account credit balance of 3,000 will become debit balance of 8,000. Hope this is clear. It was a bit tricky, but hope it's clear. Next, what they are giving adjustment: goods worth rupees 19,000 were purchased on 24th March 2022 and sold on 29th March 23 750. Sales were recorded correctly, but purchase invoice is missing, which means purchase is not recorded. So purchase will become how much? 6,75,000. Add 19,000. Add 19,000. So how much it will become? 6,84,000. It will become 6,94,000. Sorry, 6,94,000. 6,94,000. Also, what will be the entry for purchase? Purchase account debit to creditor account, no? Purchase account debit to creditor account. So creditor account balance also will increase. So this 3,24,000 will become 3,44,000. Will become 3,44,000. Okay, sir, done. Next is what? Purchase return of 1,500. Purchase return of 1,500 were routed through the sales return. It seems. So what we should do? We have to add to the purchase return, reduce to the sales return. Add to the purchase return, reduce to the sales return. So how much is a purchase return we should add, no? So 13,500, purchase return of 1,500, purchase return will become 15,000 and sales return 34,000 is there. This will become 32,500. This will become 32,500. Okay, 1,500 it is, 32,500. Fine. Expense include 3,750 relating to the period after 31st March 2022. So expense of 45,750, in that prepaid is there, that we will adjust. However, both will be debit only. That will not affect the, error of principal it is, so it won't affect the matching of the trial balance. So let it be. Purchase book was overcost by 1,000. Purchase book was overcost by 1,000 it seems. So purchase will become how much now? Purchase will become 6,95,000. Purchase will become 6,95,000. Sorry, overcost it is 6,93,000 it will be. Overcost means we took as a more balance. So 6,93,000. Okay. Advertisement will be useful, generating revenue, fine. So now we will check whether our trial balance will match or not. So pray for all the God that let our trial balance match. 64,000 plus 1,35,000 plus 36,500 plus 6,93,000 plus 32,500 plus 95,000 plus 45,750 plus 8,000 plus 55,000 plus 2 lakh. It will come to 13,64,750. 13,64,750. Okay. This side it is 1,50,000 plus 15,000 plus 8,50,000 plus 3,44,000 this won't come. 5,750 suspense account won't come because that is what we are eliminating, and it is matching. Can you see? You can't see, I can't zoom it. 1364,750, it's matching. 1364,750, it's matching. So basically now we can do the easily. What is there? Nothing is there. So 2 opening stock 65,500 in trading account. So 2 opening stock 36,500 in opening stock, done. Next is what, sir? 2 purchases 6,93,000 minus 15,000 will be 6,78,000. 2 purchases 6,78,000. 2 purchases 6,78,000, done. Next what is there, sir? Next sales is there. By sales 8,50,000 minus 32,500 will come to 8,17,500. By sales 8,17,500, done. What else? Due from customer, expense is there. Cash is done. Bank done. Suspense is done. Advertising is done. Here closing stock is 45,000. So buy closing stock 45,000. With all these things we will arrive at a gross profit of 1,48,000. 1,48,000. Done. Next what it is there, sir? Done. Due from expense is there 45,750. Out of this 45,750, 3,750 is relating to next year. So current year we have to take 42,000 only. So expense 42,000 in our P&L. So expense 42,000 in our P&L. Fine. Next is what, sir? Done. Cash is there. Interest earned is 5,750. It will come in the credit side. 5,750 P&L account. 5,750 credit, done. Next is what, sir? Advertising is there 2 lakh. They are telling advertising 5-year revenue can be generated. We can't trust on this data. Is there any solid proof that your advertising is going to help you for next 5 years? There is no solid proof. And your accounting standards for intangible assets particularly says advertising we cannot defer. You cannot defer a advertising, which means you have to treat always advertisement as a revenue in nature. Although you think that advertisement effect will be there for the next 5 years, still you have to always treat a advertisement as a complete expenditure. You cannot defer it. So whole 2 lakh rupees will go to the P&L. Advertising 2 lakh rupees, done. Next what is there, sir? Depreciation 13,500 we have to do here. Depreciation 13,500. Next what is there? This adjustment given, this adjustment given, this adjustment given, this adjustment given, this adjustment given. That's it. We will compute profit or loss. There is a net loss. Okay, there is a net loss of 1,01,750 in the balance sheet. How much was the capital? Capital was 1,50,000. How much is the drawings? Drawings is 64,000. Capital is 1,50,000. Drawings is less and add. Finally, it is 64,000. why did here they have taken a net loss? Instead you can do one thing, but capital will come negative, so you can write a capital -1, or you can show it in the P&L debit balance in asset side. Okay. Later fixed asset is there 1,35,000. From that you have to reduce the depreciation for the period. So fixed asset 1,35,000, depreciation 13,500 we have to reduced. Done, sir. Opening stock is there, that won't come. Purchase return, sales return, due from customers and a creditor. Customer will become, debtor will become 95,000 and creditor will become 3,44,000. So creditor 3,25,000, 3,44,000, debtor 95,000. Okay, done. Expense, prepaid expense is there. Out of 3,750 is a prepaid expense. So prepaid expense of 3,750. Done. Cash is there 8,000, cash is there 8,000, cash is there 8,000, cash is there 8,000. Okay, fine. There is a fixed deposit of 55,000. There is a fixed deposit of 55,000. So FD of 55,000. FD of 55,000, prepaid expense of 3,750. Sundry return 95,000, stock 45,000. This is also done. This is also done. So this is also done. Done. That's it. Our balance sheet will match. See here, they have given a note. Just go through it, because our intangible asset definition says there should be a future benefit. Proper working should be there. Future benefit. You cannot think your advertisement is so good, so effect will be there for 5 years. So advertisement, always remember, advertisement and promotional activities, marketing activities will never be considered as an intangible asset. Although we spent a lot of money, we should charge it to the P&L as and when it occurs. Okay. Okay, sir. Here they have given illustration number 7. I don't know whether we should continue or not. Let's stop for the day. Okay, let's close for the day. Illustration 7, illustration 8, illustration 9. So many illustrations they have given this for this chapter. Illustration 10, this is partnership. Illustration 10, illustration 11, oh my god. Illustration 12. Illustrations. I mean 5 more illustrations are there. We'll try to complete it off in the morning session itself. Of course, special adjustments are there, but still we'll concentrate more majorly on those special adjustments, and we will try to wind it off this particular chapter as soon as possible in the tomorrow's morning session. Morning we will start at 7:30. Okay. Tomorrow morning we will start at 7:30 to 10:30. After that, whether my class is there or not, I will let you know later. Okay. For the time being, 7:30 to 10:30 is the tomorrow morning's session. Okay, guys. Hope you enjoyed the class. We'll meet tomorrow. Thank you all. Thank you. Bye bye. Recording students, if you have energy, please go through the other video. Okay. Bye bye.